I see all the bearishness. I see all the calling for freaking 30K. And the only thing that I can think of is that everybody was so giga bullish at 70 and nobody could conceptualize the idea that this thing would draw down. I mean, really not that much, 20%. And now that it's down 20% off the highs, that we're entering into levels that, we've been eyeing for a very long time, everybody decides to get fucking bearish. I think the world has to get ready for over the next 3 months. There's going to be a little bit of a shift in the market. There are going to be a lot of hated assets that probably do well in the next 2 months. And I think it's, I think it's time to have some, fucking balls and buys,
This episode is brought to you by Perennial Finance, the on-chain DeFi primitive redesigning derivatives for the DeFi native. You'll hear more about Perennial later in the show.
We're live. Welcome back to another 1000x, boys. We are so close to my target. I felt like I was going crazy, Jonah. So I've been telling everyone since 70K that we're going to reach 55, and now we're at 57. And everybody, the funniest part is everybody's claiming that, oh, you've been bearish since forever. You're always like, no, I flipped bearish at 70K. Now we're at 57, and now I'm telling you it's time to be bullish. So let it be known that I'm not always a bear. I just happen to be a bear for like the last 2 months. But this is not my natural state of being. I'm obviously a bull. Like, I'm a natural bull. I want shit to go up. Things to...
you absolutely nailed it. Like, you got bearish on the dead ball highs. From the sounds of things, it sounds like you actually acted on it. Like, you sold a fair amount of crypto, which,
yeah,
I didn't have.
I tried to get everyone else to sell crypto too. It's like, guys, listen. Like, very, very rarely in my entire life have I seen Bitcoin go sideways for so long in a bull market and then have that be not distribution. I mean, it's like almost every time, right? I mean, the way that...
Well, what gave me pause was like, I was concerned because last summer we chopped around 40K for like 3 months. And if you lightened up there hoping for a dip down to 20K, you wouldn't have gotten it. You would have missed this whole 2xing. So I was afraid of missing a parabolic rally.
You mean 30K, not 40K.
30K. Apologies. Yeah. Sorry, I misspoke.
I mean, yeah, we chopped around 30 for a while, but that was very different because that wasn't after a parabolic rally. It wasn't after we broke all-time highs. It was after a giga-long bear market. This is different. I mean, the way that I think about it, it's always just in risk-reward terms and value and momentum terms. So at 70K, most people's targets were 100, which isn't that far away. It's actually pretty close. It's a 50% move. So what are you looking for? You're looking for a 50% move higher. And where do you stop out? Like 50K. Basically, I don't think Bitcoin was enticing enough at 70K to get a bunch of people to come plow into it because a lot of people only had that 100K target. So it needed to go to an area where people felt like there was value. So, I mean, there are really only two ways for Bitcoin to run. Is that you just have crazy momentum and crazy FOMO, and people just keep piling in, and that's how, we get these all-time highs. But once you get to all-time highs, if the momentum doesn't stick and you start to go sideways, people start to get a little bit more rational and fearful in their allocation. And so they kind of wait. They're like, okay, well, if we're going sideways and I don't need to FOMO in right now, and so a lot of the FOMO buyers drop out, and then you have to say, okay, well, if it's only a 50% higher move to your target, then that's not super attractive. But now, okay, we're 57, maybe 55. That's almost a 2x to your target. And so I think that is a very good, these are much better levels for value buyers to step in. And so when momentum's gone, the only thing that saves you is value, and we're getting pretty close. You think ETH, I'm buying here. I'd definitely be buying here. I'm buying ETH here, buying BTC. I think you can buy some memes again. I actually really like Arweave. It's a good one.
Why Arweave?
Because they're going live with a lot of stuff. like their AO token is going to be their first major project launched on the Arweave network, which is kind of interesting. They're sort of pivoting away from just being a file storage solution to having a broad-based network that's more like an Ethereum that you can actually go build things on top of. And then I also, I mean, just looking around, things like Arbitrum are, like today, ETH is down 4%, Arbitrum's down 70 bips, and it has collapsed by, 60, 70% from the dead highs. Actually, I think from the dead high, it's down 58%. It's like, okay, there's certain things that are starting to actually look sort of appetizing. Then now is not the time to be fearful. Now is the time to accumulate. That's my personal view.
Be greedy when others are fearful, said
Exactly.
the great investor Avi Feldman. So the way that I've looked at it, I'm not as active as you, as we all know. So I try to kind of avoid over trading. I try to avoid chopping in and out of stuff because, frankly, I'm just not as good as you at that. However, I am not fully allocated to crypto. I'm not, 10 out of 10 max long. So basically the way that I view this pullback is, for those of you out there who are in my shoes and, you still have some cash available that you could deploy to crypto. These are the types of levels where it might make sense to buy. And where, you don't have to feel bad about not having top ticked it like Avi did. You can kind of say, all right, bust out the shopping bags, start nibbling on interesting stuff, maybe diversify into some new tokens. And one of the things that you learn on a trading floor is you don't really learn how to trade something without skin in the game. So I like the idea of buying, some of these forgotten tokens like Arweave and Arbitrum that haven't gotten a lot of love recently amidst this boom in L1 kind of performant tokens. So to me, that's a very good idea, Avi. I mean, as you can see, I'm kind of chilling right now, touching a bit of grass.
Are you touching that grass, Jonah? Where are you right now?
I can't quite reach it from here. I'm in LA, but you have a nice Hollywood
so nice
view in the background. It's the outdoor office. I think
right
that I'm trying to. New York is great too. I'm trying to kind of stay cool throughout this sell-off and not puke anything, which when you're not fully allocated is extremely easy. But what I read on crypto Twitter is just this like overwhelming doom scroll of panic and fear and vomiting of tokens. And I personally, I can't really identify with that because I don't really trade on leverage. I'm not, as we recommend again and again on this podcast, like don't invest more than you can afford to lose. It seems like people really invest more than they can afford to lose because on what should be a fairly routine bull market pullback, it seems like the community is just getting rinsed, and that's not good. So, friendly reminder to the community, don't invest more than you can afford to lose because there's nothing out of the ordinary about this. During the 2021 bull market, the thing pulled back like 70%. So this is nothing compared to that.
Yeah, I mean, I think people just got really complacent, Jonah. And no, now is not the time to be complacent anymore. Now is the time to go hunting. In my personal opinion, I think that there are a lot of very good trades out there. I mean, you look at ETH.
I'm doing more studying of crypto than I've done in a long time.
That's good. What are you studying?
I'm studying some of the newer chains that are like obviously I'm not I like your idea of revisiting Arweave and we talked a little bit offline about Blur, some of the ones that have been out for a while. I'm kind of trying to get myself a little bit more up to speed on Barachain, the drama around Eigenlayer, what Telegram is doing with Ton, some of these newer projects. Like for the longest time, it was just like bear market down only, and then Bitcoin like best risk reward by a mile. Now we're starting to enter the phase of what I still think is the bull market, where it's getting dicey. We could go down a lot or up a lot from here. Ed, you're going to start to see real dispersion between the shit and the amazing stuff. And I think that like alts are starting to look tasty for the first time since maybe late 2020.
What do you say? Like every alt, I guess meme coin is like ripped like 1,000x in the last
I don't
in the last
consider meme coins
5 months.
alts. I consider, how about this? I consider the meme coin space as a whole to be an alt, like an alternative use case for crypto, which is this on-chain casino that Solana kind of nailed, right? Solana kind of dominated. I don't really view like WIF as an alt. I view it as like a chip in that casino, you know?
Yeah, I guess that's fair. So I mean, really, what you're saying is like the alts, like the actual projects that are building, are starting to look tasty to you right now, because you think in the second leg of this move, maybe something like a Blur, which instead of basically keeping pace with BTC and ETH, radically outperforms in the second half as people try to actually bid value. I could see that. Happening. I mean, look, there are all sorts of things that happen in this type of market that make it, that makes sense to try to look at. I'll give you an example of one. ETH is back, I think, to a 28% discount, which is crazy. If you're bullish ETH BTC at all, I think the best way to express this is just to buy ETH. It's a bit of an election play, because I think if Trump gets elected, then we almost 100% get an ETH ETF. And if Biden gets elected, then it's a little bit more dicey. But I still think that just given the fact that basically the same arguments apply for ETH that apply for BTC, and it doesn't seem like anyone's really supportive of the SEC's mission to try to classify ETH as a security. I think it makes sense to allocate. So that's an interesting trade right there that I'm definitely looking at. And honestly, I see all the despair, I see all the bearishness, I see all the calling for freaking 30K. And the only thing that I can think of is that everybody was so giga bullish at 70, and nobody could conceptualize the idea that this thing would draw down, I mean, really not that much, 20%. And now that it's down 20% off the highs, that we're entering into levels that, we've been eyeing for a very long time, everybody decides to get fucking bearish. And not only that, ETH BTC is up, 1.93%. I think the world has to get ready for, over the next 3 months, there's going to be a little bit of a shift in the market. We're going to get things that are, look at what's outperforming right now in this dump. There are going to be things that start to do well that were doing very poorly before. There are going to be a lot of hated assets that probably do well in the next 2 months. And I think it's, I think it's time to have some, fucking balls and buys,
This episode is brought to you by Perennial Finance. Perennial is quickly becoming one of the go-to derivatives platforms and liquidity layers for all of DeFi. So let me tell you a little bit about them. There are kind of 3 things you need, right, when you're thinking about a place and a platform to trade on. First one, great trade execution. Second one, low fees. And third, of course, an on-chain permissionless platform. And Perennial nails all 3 of those buckets. With the launch of Perennial V2, they've made all of that possible by introducing a ton of new features, such as faster oracles, which reduce trade execution to seconds, lower fees, competing with major centralized exchanges and minimizing fees for both takers and makers. Fully modular markets, which allow the protocol to support any price feed out there. And fourth, cash settled, right? The trades are cash settled in USD, not in crypto. Perennial allows you, the trader, to gain access to deeper liquidity with only a fraction of the TVL. How it works is that Perennial enables a 2-sided market made up of both traders and liquidity providers, right? Traders deposit the assets to get levered exposure, while liquidity providers provide these pools of capital to earn fees for taking the other side of the trader position. Perennial allows you to trade crypto, perps, FX, and coming soon, NFTs and more. Backed by some of the best investors in the industry, Perennial is a must-check-out platform if you're a crypto trader. Go check them out by clicking the link in the description. Give 1000x some credit. Go check out Perennial. You're going to love them. All right, let's get back to the show.
I'm starting to get bullish the entire Ethereum ecosystem. Like you and I had that protracted debate about Solana and Ethereum. I really continue to believe that the Ethereum ecosystem is going to perform. And I see a lot of FUD on Twitter about ETH. Like, hey, name one thing that ETH does better than any of the other blockchains out there? Like, I think that's kind of a stupid argument, and I want to debunk it right now. Like, Bitcoin doesn't do anything better than any other ecosystem anyway. Like, you can move money around faster on pretty much any alternative L1 than you can on Bitcoin, but that doesn't mean that Bitcoin's irrelevant, right? Like, I think that when you're talking about tradable software that's ultimately very complicated and difficult for most people to understand and difficult for even experts to trust, right? Battle-tested code is a moat, right? And Bitcoin is battle-tested, Ethereum is battle-tested. These are like, and even Solana, like Solana's becoming battle-tested, but the sort of the Pico top in Solana, the meme coin boom, coincided with congestion issues that led to, a little bit of doubt about the performancy of that chain, and ultimately a sell-off ensued. I'm not saying that the two are related. It was like more of a broader market sell-off. But my point is that like ETH, for what it's worth, is a decentralized computer that hasn't broken yet. And that's really important to a lot of people that, don't necessarily need their transactions settled in seconds, in milliseconds. Maybe they need it settled in seconds, right? Like financial applications. And so, everybody goes back to Larry Fink and BlackRock, but like, let's take Fidelity, another large institution. If they want to settle something on chain, they probably don't mind if it's on ETH or an L2 on ETH instead of Solana, because they're just, they don't require transaction settlement speeds to be faster than the speed of ETH. So ultimately, like, what matters to them is security, knowing that their transactions will show up on the blockchain the way that they're supposed to, and knowing that there won't be some sort of interference from hackers or just like breakdown of the code. And to me, like, that's why I think we can start to expect a longer tail of applications getting deployed on Ethereum, especially financial applications in the near future, which should lead to a bull run or outperformance of that chain, just because of the moat that it does have, which is the fact that it's battle tested. Does that kind of make sense to you?
I tend to agree with you because I think that, I think there's a lot of value in ETH being the number two, the biggest number two for a very long time. But the reality is that the reason that I was so bearish for such a long time up until this moment, at least in the short term, is because it's like crypto natives don't care about this, right? And crypto natives have really drove the market besides for BTC, right? So you basically had the boomers living in Ohio buying a bunch of Bitcoin in their brokerage accounts, and then the crypto native people doing everything else. That's why I really don't think it's going to change much until you get more institutional access to Ethereum specifically. But in the short term, what I've realized is that the market also trades on narratives. And so Bitcoin had the halving moment. It had its narrative. It had, runes. It tried a few things. Bitcoin, Stacks had its Nakamoto upgrade. All these things happened for BTC, and now they're over. There's really nothing else on the horizon for Bitcoin that can get people super excited about it. But there are certain things for ETH that will get people very excited for it. I mean, we can talk Eigenlayer. I think that they messed up their airdrop. I still think it creates a bit of a wealth effect, and I also do think that, look, at the end of the day, it's a new primitive.
Just quickly before we go to Eigenlayer, I do want to say I think there's one point on what you said. Sorry to interrupt. I do think there are major geopolitical catalysts for Bitcoin in the short run, but there's no like blockchain native catalyst. I agree with you there. I just wanted to make that very quick distinction. Go on.
Yeah, I would agree with that. There definitely are geopolitical catalysts. I mean, hopefully we don't experience them, but there are, and you can see it. You can see it in gold. I think there's been a pretty large dispersion between Bitcoin and gold. But I think, as if the world heats up, that correlation will come back eventually, which was strong previously. But I think that within the actual world of crypto, the only thing that has any meaningful narrative or meaningful drivers for liquidity flows is ETH and ETH ecosystems, and then meme coins. That's really it at the end of the day right now. And so my take is that it's probably time for people to start rotating from ETH to BTC. And I also think that the relative strength of ETH in the downturn is going to draw people back into it. I genuinely think that the reason that ETH is going down less than BTC is very simple. BTC went up more than ETH. And so they're less they're less sellers of ETH. But I think that psychologically what that does is it primes new buyers. Oh, wow, look, it's outperforming to the downside. Maybe it'll outperform to the upside. Even if that, it's probably not because there's a substantial amount of buyers of Ethereum. It's probably more because there's a lack of sellers relative to BTC. There are a lot more people willing to sell BTC than ETH right now. Because
imagine it does outperform to the upside. Let's say Bitcoin goes back to 100K. That's like 70%. And then let's say ETH BTC rallies back to 0.7. Like you've got a quick little two-bagger there if you buy some ETH right now, without that much risk.
And if you buy ETH, probably even more.
Yeah. ETH, I think, is the trade. Couldn't agree with you more there. I mean, it's like we just saw this grayscale trade play out in Bitcoin. Like, why on earth wouldn't it play out in ETH? And you can do this from your brokerage account. You don't need to be like 3 layers of abstraction into some restaking protocol to capture this.
Yeah, it is kind of amazing how the market will just give you the same opportunity over and over and over again, and you kind of just have to take it.
With the same fucking narrative too. It's like, but Gary Gensler, denial, blah blah. Come on, we've seen this movie already. We literally just saw this movie. It had this same, and it wasn't even like with different movie stars. You had the same movie stars in the same movie.
I know,
and yeah,
like genuinely.
There's the ETH discount right now. I don't have my Bloomberg in front of me. It's like 25% last I looked.
I think it was 27 when I looked. Let's see. But look, it's just funny. Yeah, I guess 25% right now. But it's funny because it was 8% 2 months ago. Now it's widened back out. And if you're bullish on ETH, like what a great way to allocate. I do think also I was super bearish on L2s, but just watching their relative strength during this drawdown and then realizing that, wow, these things have just been absolutely nuked. Like they've been nuked to just everything. If ETH BTC goes up 10%, then these things are probably up 30. I think you could obviously just buy more ETH and that's more liquid. But I am noticing that I think a lot of these coins, because they didn't go up that much in the run relative to BTC and ETH, there's not that many people left to sell them, right?
Yeah.
I mean, Arbitrum had like it had a pop and then it went straight back down, and now it's trading where it was literally 2023, right? And like the summer of 23, it's back. It's basically back below the highs of summer of 23, like actually far below. It's like back in that range. So I mean, think about this: BTC doubled in a time span where a lot of these things are flat, and I think that just means there's just really not that many people left to sell.
You have a great point there, and it dovetails with something that I heard when I was working at Cumberland that I wanted to share. So one thing that used to frustrate me when I first got into crypto is that failed projects don't go to zero, right? Like Cardano, Polkadot, like in my mind, these things should be worthless crap, but they aren't, right? They're still worth billions. And let's say that some worthless project or seemingly worthless project were to go to zero or very close to it, just a few tens or single digit millions in market cap. And then there was some sort of promising development on the roadmap for that project. Your risk reward would be outstanding buying it at buying something that's already sort of proven and had a past at a low valuation, close to zero. But I found myself unable to do that with these tokens that, like you just mentioned, okay, maybe they're not worthless, but they've flatlined and underperformed, but they're still worth billions or tens or even in certain cases, more than 100 billion. So I was talking to Don Wilson about this, my former boss, who, he's the CEO and founder of DRW. And I was expressing frustration about the fact that I wanted to buy sort of like rebound narratives in the altcoin space, but I couldn't justify the existing valuation. And he just looked at me and he was like, Jonah, tokens don't file for bankruptcy, okay? These things aren't going to go to zero. They just sort of find equilibrium and stabilize when all of the sellers with liquid supply are out. And what you have to sort of assess is whether whether there's going to be this ongoing supply just whacking the market as, maybe the foundation's structured in a way where it's just long a ton of tokens in escrow and they keep getting unlocked on some schedule, or VC unlocks or whatever. He's like, just be careful of, avoid the freight trains. But in certain instances where there isn't, an avalanche of tokens that's about to hit the market, no pun intended, like, you can feel comfortable getting long stabilized, like old stories at what seems like high valuations, and then they'll pump again when the narrative comes back. And to me, that's just like a light bulb went off. I'm like, oh God, I've been in TradFi for too long. This makes sense, right? You can step in at what seems like a decent valuation for something that's been underperforming. It's not going to go to zero. Tokens don't file for bankruptcy as long as the future looks bright and there isn't a big VC bag about to get dumped on your face. You're kind of good to go. And you make a good point about Arbitrum. That might be one of those, like maybe not Polygon, but Arbitrum. Yeah.
I don't know, because I haven't spent enough time digging into their future plans. But I can tell you one thing: the team's still working, right? And if the team if the team is still doing things, I think they had massive unlocks of supply. So once supply runs out, and you have an actual team that's dedicated to a project, if you spy an adjacent narrative like ETH BTC going up, okay, well maybe you should start looking for things like Optimism on Arb. And I mean, maybe Lido. I'm a little bit nervous about that one still, just because I mean, I think the supply issues are still pretty prevalent there. I do think that overall, what we're probably going to see is that new coins were good in the first part of this cycle, but new coins probably start to be bad soon. And the reason that new coins start to be bad soon is because there is a crazy amount of supply that's coming online for a lot of these, because they were good because they launched with a low float. And now that is coming to an end, and unlocks are starting to happen over the summer, VCs are starting to, basically what's happening is VCs are going to start to dump, the early investors are going to start to dump. I think that a lot of these quote unquote new coins are probably going to be in trouble.
Huh. And by new coins, you're not just referring to like shit coins that people mint on pump.fun.
No, I'm talking of like the Suis, the Says, all of these, the Tias of the world,
the
that
Aptai
are like like these things. Maybe they're good projects, maybe they're not. It actually doesn't really matter. What matters is that they have very low float, and that it's going to be very difficult for people to get out of these positions, right? There's just going to be a ton of supply that hits the market, and these are probably very good shorts, right? So one thing you might be able to do is go long things that don't have supply issues. Go long a Solana, go short an Aptos or short a Sui. Run that pair trade, right? That's actually kind of interesting to me, right? And I think what you're looking for is you're just looking for things that don't really have supply issues, and you're trying to find the massive unlocks. And over the next little bit,
Solana has the opposite of a supply issue. It has like a deficit of tokens because FTX swallowed up so much of the liquid supply that people thought they had. Now it's being like recycled in the form of like multi-year locked Solana that people want to hold on to for long-term reasons. Anyway, like in terms of like bag reloading at current levels, like you're just rebuying stuff that you sold higher. So you'd be bag reloading. For me, it's just like bag adding. I would say ETH, Solana, or locked Solana if you can get it, and I'd say a few Ethereum ecosystem plays and some meme coins that have staying power. Like that's already starting to look like a pretty decent little nugget that you might be able to earn a decent return on.
Yeah, I would agree with that wholeheartedly. I mean, what was kind of interesting about the Solana deal is that it's a great deal because you can hedge out some of it through perps, but also let's say you buy Solana. I think it cleared at $64, and then it's trading at 123. You're actually getting double the yield on your capital committed. So if Solana yields 7%, you're getting 14% yield. If Solana goes to 600, like in a crazy world, you're getting 70% on yield, because even though these tokens are locked, you can still stake them, and you still get emission. And that's one of the secrets of VCs and these locked deals is that you're really just you lower the cost basis. There like a lot of people will run these deals sort of behind the scenes. Maybe I shouldn't be voicing this too publicly. I hope the VCs don't send any hitman after me, but like, you'll have your big L1s go to somebody and they'll say, hey, we'll sell you like $50 million of this token or $20 million of this token at a 70% discount. But then you get to stake it, and then you get all of the yield from the staking it. And so it like really reduces your cost basis even more. And the reason that they do that is basically just to get, funnel more cash in, and then you distribute on your average person that doesn't know that this is happening. It's not.
So if you're an average person who isn't really in the the smoke-filled back room, one thing that you can do to avoid some of the deleterious impact of this on your net worth is stake your tokens, right? Like, don't just hold spot, stake your tokens. And the reason why is, like, one thing that we used to say at Cumberland is that staking tokens isn't really earning yield. It's just avoiding the inflation that you would experience if you didn't stake, right? It's like a form of inflation avoidance, not like some sort of, it's not like, well, you get it. I mean, my point here is like,
the other thing I'd say is that if you really want to avoid it, be very wary of high yields from L1s, and then also make sure that the L1s that you're looking at don't have super concentrated nodes, because
don't just stake thoughtlessly. If there's a high yield, there's a catch. But equally, like, if there's a normal yield in sort of like the 5 to 10% range, if you're not staking, you're getting diluted, and if you're staking, then you're just sort of treading water. And ultimately, I think what's important about staking as well is that it prevents you from over trading, right? Like, it makes you think twice, but it adds an extra layer of complication before you go and churn in and out of tokens. And again, unless you're Avi Feldman, active trading is really hard at best, like really wasteful at worst. So I like staking because it makes me just think a little bit more before I go and do something.
I think that's good. I think that's very reasonable. Jonah, I have a question for you. So when you look at the market today, obviously crypto is doing poorly, but it's not just crypto that's doing poorly. The traditional markets are also doing poorly, right? And I'm curious, does a general market pullback, does that seem likely in the future? Are you worried about that? Are you worried about the Fed fucking things up right now?
What the Fed has done to fuck things up is already priced in. I'm not worried about them like hiking more, so that would be a real fuckery, and I'm not worried about that. But yeah, this is yet again a sell in May and go away type scenario where everything from oil to Bitcoin to the S&P to NASDAQ has come decently off the highs. And I think what worries me the most about markets right now is the threat of sort of a supply side inflationary shock, right? The threat of some sort of like let's say that, well, there's two things, right? There's the threat that you get a geopolitical event that spikes oil and gas, similar to like 2022, the Ukraine war. Alternatively, there's like a chance that, let's say that Trump's way ahead in the polls and he starts announcing stuff like, I'm going to forcibly have the army deport 15 million people from the labor force, right? Mm-hmm. Or I'm going to hike tariffs on China by 30%, right? Then suddenly, like, you become supply constrained. There's inflation in labor costs, inflation in the unfinished and finished goods that we import from China, and then suddenly, like, the Fed has to start reacting and hiking rates, and then the economy gets all gunked up. Equally, I'm worried about a demand side inflationary shock where Biden is ahead in the polls and says, hey, capital gains tax is going to be hiked to 45%. So if you live in a high tax state or city or area, your all in is going to be like 60% on capital gains. So then markets nuke. Ultimately, like I'm worried that there's going to be some sort of shock to the system coming out of like policy, not the actual economy. Like absent our geriatric leadership, which I find personally frustrating on both the left and the right, doing unpredictable, like kind of stupid things, the economy looks good to me. Like I think the effect of AI as a tool, like these chatbots, is like massively deflationary. Structurally, commodity markets are very healthy, robust supply, robust demand growth. There's nothing like really structural about the world economy to be worried about, except for humans, like erratic old motherfuckers doing stupid shit, right? And forgive my my language. That's literally what's stressing me out right now, is that we're in this peaceful time, and then some obese guy in a dictatorship somewhere is going to wake up and start like firing artillery at South Korea. Like it's just people, man. People are crazy, and
that is definitely a take, Jonah. People are for sure crazy.
Yeah,
I don't know.
That's what worries me, is erratic political and policy behavior. Does that make sense?
Yeah, I understand that. I do understand that deeply. I do think though that it's possible that we get stuck in the trap of, if, like, let's say for example, the Fed starts to cut and inflation comes back. I think people right now, they're worried about hot prints already. And if the Fed starts to cut too soon and inflation does start creeping up again, then people start to worry that we're stuck in a cycle of how do we control this thing. I'm not really sure how else to I'm not really sure how else to take the fact that the market is coming off now, because everything else looks strong. I mean, companies look strong, earnings look strong, everything else looks okay.
I think you're supposed to be long everything in most markets into this dip. It's hard to close your eyes and catch the falling knife, but like I think across all markets, that is the right trade. If you look at it through a commodities lens, the world is growing quickly. Like we're in the midst of a boom, and the big question mark is, will one of the relevant geopolitical actors do something horrendous to fuck it up, kind of like Vlad did in 2022? And I think the answer is no. I think you have to underwrite that possibility and sell that put, and buy your Bitcoin with confidence, and your Nvidia stock and your Ethereum L2s and your Solana and your Joe Biden. Not financial advice, with confidence, and in a size where you aren't like doom scrolling and doom posting on Twitter if you're down 20%. Like maybe this isn't a time to be levered up. Maybe it's a time to just nibble with spot or smart plays like ETH.
I think the nibbling makes sense. I mean, look, I'm bullish. I like these levels. I think they're good. However, I am cognizant that these sell-offs tend to end in a bang. They don't tend to end in a grind. So they tend to end in a down 10, down 15% day. They don't tend to just, okay, we're down 5%, 5%, 5%, 5%, and then suddenly we're going back up. And so despite the fact that I like these levels, I think that in a year from now, if you buy here, you're probably quite happy. I do caution that you should probably wait for something crazy to happen. Like if you really want to blow the nut right now, you should probably be waiting for something crazy to happen and then stepping in when you see all those liquidations. And then what you're doing is you're supposed to be buying all the things that you think are gonna have a narrative over the next 6 months, and then concentrating your positions. That's how I'm trading this market right now.
So some people do that with limit orders. I think that's very smart, and I think that some people do that with limit orders. I don't like doing that. I don't like adding risk with a limit order that's passive. I think that a limit order is a great way to reduce risk, like take profit. Like I would, I haven't done this because I'm lazy, but I should happily submit like some 150K limit orders in Bitcoin. But if you put a passive limit order in to buy, you're like, okay, hey, I think that if BTC trades 42K, I'd like to be getting hit there, right? I think that that's kind of a bad idea, because adding risk involves more thought and nuance than reducing risk. And there is a scenario where you could be delighted to add risk at 42K on like a crazy fat finger style crash that rebounds very quickly. Equally, if it's trading 42K because there was a 51% attack that was successful, you're like kicking yourself, right? And I'm just using extreme examples to illustrate my point. I don't actually expect that to happen, but I think that what you just said, Avi, is definitely correct. You should wait for a crash to add, but you shouldn't be passive about it. You should be like, this is the time to be checking Twitter frequently, actually, I found that Grok on Twitter is a great tool for getting smart on protocols, because it's
Really?
Yeah.
How do you actually use Grok?
I did for the first time recently, because I was like frustrated that I love the way that chatbots explain complex topics to me in ways that I can understand without having to.
In ways that you can Grok it easily.
Funny that, yeah. But the problem with like your GPT-4s and Claude Opus 3s of the world is that they're not really up to date, right? They're not like, they don't drink from the Twitter fire hose. So if you use Grok, like the model is shittier, and you can tell that you're talking to like a GPT-2 level intelligence, or somewhere between 2 and 3, but at least you're getting like synthesized, spoon-fed English paragraphs about the latest and greatest in crypto. And it references the tweets if you want to go ahead and do further research on your own. And I find that that's much better than like digging through mountains of docs and blogs, frankly. So now is the time to be doing shit like that. Maybe Grok is a good hack for studying like altcoins in its market.
I got to start trying this out. I mean, I will say that the market has really, it just moves so fast these days. It's actually quite difficult to keep up with everything. And you'll see something new basically every 30, you'll still see something new every 30 seconds. And I used to be able to go deep, and now I go broad. And so maybe this is a faster way to go deep. This is kind of interesting. I'm actually looking at this. Give me the latest on this layer debate: social consensus versus AVS security. Look, the issue is I don't know if this is true, but I mean, at least I can see all the tweets or references too. This is pretty good. That's the point. I like this.
Like I was struggling with just like, I was like, I can't keep up with crypto. This is way too hard. I need like little shortcuts and hacks. And what Grok gave me, shout out to Elon Musk, is that there's like an incredible source of information and news in Twitter. The funny thing about it is, like, with GPT-4, when you ask it questions about Eigenlayer, it's clearly hallucinating, right? But when you ask Grok questions about Eigenlayer, you know that it's referencing the latest news about Eigenlayer. It coherently explained to me, like, Eigenlayer is a protocol where you put in staked ETH and it restakes it in other sort of applications and protocols across the Ethereum ecosystem, and uses stETH or the other types of locked ETH as collateral. And here's why there was a problem recently. There was some kerfuffle with people trying to withdraw their stETH and getting charged large fees because whatever restaking was going on, had some sort of penalty for early withdrawal, plus like gas and all these like hidden little ways that people got dinged for pulling their stETH and their other staked collateral off of Eigenlayer. I'm like, oh, that's a coherently explained. I did a bad job paraphrasing it, but like a quick paragraph or two on what's going on there. It's way faster than like trying to dig into, what the devs are saying about it and complaining at each other. And the great thing about Grok is that Twitter's so real time that you don't really know if it's all true anyway, but you kind of have a gut feel for what to trust and what not to trust. And that sort of like perception, that sort of like chasm between like what you know is ground truth and what you sort of see on Twitter, it persists across Grok. So you can evaluate what you're reading with the same framework as how you evaluate tweets, and it makes sense.
I like it. I'm going to start using this. We should create like a repository of all the things that we use to look at the market and share it with our 1000X guys. What do you think? I actually think that'd be kind of fun. Maybe we can do a show and tell. Go back to kindergarten. And I feel like, hey, so this is how I use.
Maybe we should do. What if we took the transcripts of all of our podcasts and then had an AI agent create like talk about the markets like in our voices using.
Wait, so what you're saying is that we wouldn't actually have to podcast anymore. We wouldn't have to do anything.
Yeah, exactly.
I mean, honestly, it sounds pretty nice. Like, I mean, honestly, these podcasts are great because we just show up here with zero preparation and just kind of shitpost with each other. So I can't really, I can't really say it's like quite difficult to do. So, but it could be kind of fun to try. We could also get AI to create the videos.
You know, it's funny. We say it's not difficult to do. We're both, seasoned trading veterans. I love talking markets with you. I don't like talking markets with a lot of people. And I find, it's funny. I watch certain podcasts where two, people kind of like us try to have a conversation like what we're having. And it kind of goes in one ear and out the other. Like oftentimes two traders talking to each other just sucks. But like occasionally you just find your mojo with somebody when you shoot the shit and talk markets. And yeah, I'm glad I found you, Avi. This is definitely a valuable dialogue for me. Hope it is for others.
It's for sure entertaining. I don't know. You can leave a comment telling us if you actually find us valuable or not, or you just listen to us for the banter, of which every now and then there is some. I don't know. What else you want to talk about today?
I was going to say, one of the things that I experienced early in my career at Lehman Brothers, you get banter on trading floors, a lot of noise, not a lot of signal. But there was this one guy, not going to name him, but he was just basically the best trader in my product on the floor, best credit trader.
You fucking worked at Lehman. That's crazy.
Yeah, I know. so long ago. And basically the way the phone systems worked at a bank back then, I don't know how they work anymore, is everybody would have this giant, like, kind of high-tech phone with like 64 different phone lines on it. And people could have conversations that they could basically like make private. So if you tried to click into somebody's line, you wouldn't be able to hear it. Or they could make it public, where you could literally just click on, you could see that the light was lit up. You click on the button, pick up your headset, and you could hear what the person was saying and who they were talking to. You just listen in on their phone conversation. And this guy, this amazing credit trader, he now works at Citadel. He's a legend. He used to talk to this guy at Fortress every day about markets, about macro, about credit. And one of the fastest ways that I was able to educate myself when I was, 21 years old on a trading floor was I would just listen to his line. And he would leave it public on purpose to try and, get other people involved in the conversation. And it's funny, that was like an early form of podcasting, right? No, podcast didn't exist back then. So if you wanted to get smart on trading and how to think about markets, like listening in on somebody's phone conversation about a market was basically the best you could do. And Avi, I feel like you and I kind of recreated that, but thanks to Blockworks and streaming, we can share it with more people than just a couple of other randos on our trading floor.
Yeah, that's fair. I think that's actually it's good. I mean, that's why I like being on this trading. That's why I like being on a trading desk in general, is that you just get to hear things that you wouldn't necessarily hear otherwise. You just hear snippets of information. You hear people screaming at each other about a trade that they're trying to get done, or a deal, or some flow, or whatever it is. You get snippets of information that you can use to make money, and I think that's very
this is why I've never worked at a hedge fund, right? I've never worked at a hedge fund. I work at Onyx now. I've worked at Goldman Sachs, worked at VTOL, Cumberland DRW. Like you say, like right now, for example, when I'm on my trading floor, and I hear like an explosion of noise going on behind me, based on the location of the noise, I'm like, oh, something's happening in naphtha, which is a product that you use to make plastic, right? Okay, so the petrochemical space is kicking off for some reason. Or at VTOL, when there'd be like a big kerfuffle down the floor, like, oh, those are the fuel guys. Like, I wonder what's going on. And then you dig into it and you're like, oh shit, like some freight lane just got shut off by a bunch of rebels, right? Like, oh, interesting. And same at Cumberland. But like, I don't understand how people work at these hedge funds and they just sit in cubicles with no information flow or shouting or business or anything, and they just make money happen out of thin air. I'm personally better at monetizing information flow than I am at like just doing like super rigorously structured analysis. I do that too, but it's nice to have that trading floor vibe, and podcasts give you a little bit of it. That's why crypto is a little bit more of a democratic asset class than oil, because you can download a lot of information from the internet about what's going on in crypto, but you really can't.
Our quote unquote trading floor is crypto Twitter.
Yeah,
it's kind of
exactly.
He's got to curate your feed so you don't have there's too much nonsense. But yeah. Anyway, Jonah,
you got to Grok shit.
I think that was good. Jonah, as always, I love talking to you.
Likewise, Avi.
We'll do it again in 2 weeks.
Speak to you soon, buddy.